Hey everyone, Tony Smith here again with crinco.com with a quick tip regarding your flood insurance. Recently, FEMA rolled out Risk Rating 2.0, and this rollout has been quite shocking for many Florida residents. Risk Rating 2.0 is this methodology used for accurately charging for flood insurance based upon a property's own unique flood risks. Prior to Risk Rating 2.0, flood insurance rates were largely determined by which flood zone the property was located in, among other things. This meant that someone living in Kansas whose property was not located in a flood zone would pay roughly $500 per year for flood insurance, and someone living in Cocoa Beach, Florida, whose house was also not located in a flood zone would pay the exact same amount. With Risk Rating 2.0, rating is intended to be more actuarially sound. In this aforementioned scenario, the person living in Kansas could actually see a rate reduction to roughly $400 per year, whereas the person living in Cocoa Beach, Florida, may actually see an increase to $2,000 per year or more. So here's what you need to know if you're buying a home. First, if you're buying a property in a flood zone, the mortgage company will require flood insurance. It has become increasingly important to shop for flood insurance at the very beginning of the purchase process, as we have seen flood insurance rates in coastal counties be $5,000, $6,000, even $7,000 per year, which could jeopardize your ability to qualify for the mortgage. Interestingly, elevation certificates are no longer required, so you can get an accurate flood insurance quote in just a few short minutes without having to fork out a couple $100s to a surveyor. Second, consider seeking alternatives to a federally backed flood insurance policy. With the passage of the Biggert Waters Act, there's been this surge of private flood insurance companies stepping in to offer flood coverage at really competitive rates. In the past, private flood insurance seemed like an expensive option, but with FEMA's Risk Rating 2.0, private flood insurance is quickly becoming the most viable option for many coastal residents due to price. And then lastly, inquire about a policy assumption. This is where you, as a buyer, can assume the current flood insurance policy of the seller of the home. In so doing, you may be able to continue with their legacy flood insurance rates until their rates increase on an annual basis to the amount of the Risk Rating 2.0 rates. It is possible that this program could be removed in the future, but it's definitely worth looking into. Want to see what insurance rates look like in your area? Get a quote online at shopitnow.crinco.com or give me a call at 321-586-3754. Crinco.com, insurance simplified.